Hi everybody, welcome to Trendy Trading. My name is Jonathan. Today we'll be going over the SPY, the Qs, DIA, and IWM. Specifically, we'll be talking about the neutral strategy where I've taken supply and demand, Fibonacci's, trendy edges, and trend and putting all that together to give you this really good blueprint. That blueprint is very important because it's a high probability setup. Let's go ahead and get started with the SPY. And after I show you these two charts, I'm going to take you into my trading view and show you the bigger time frame, so most likely anywhere from a monthly to a weekly on a bigger chart. All right, so SPY, let's talk about the trend, candle structure, talk about the trendy edges, and talk about this 9 EMA cloud because that's very, very important. So on the SPY for this week, I want you to notice that my banners are primarily red, meaning that the immediate trend is down. Notice that the yearly, though, is still saying bullish. So we're looking back at least a year and noticing that SPY is holding what we would consider here at Trendy Trading a bull channel. Notice that the structure is an inside and up. Okay, very important going into this week, and it makes it difficult because of this wick that we have down here. This is going to be our low that we're focused on. So what I want to say is that as long as this low holds, I believe we are just creating a nice sideways channel here for a potential move to the upside. Now, there's a lot of fear out there, and I get that, and there's a lot of things that I don't want to ignore, but first and foremost, technicals are the most important thing for me. So we got structure. Now let's look at this 9 EMA cloud. Well, what's so important about the 9 EMA cloud? Well, I'll tell you this. The easier trade is either above it or below it. So in saying that, right now we are literally in the middle of this cloud, which tells me that it's going to be a very choppy, volatile ride. It's not one that's going to be easy. So that's a bigger look. So what I do is break all this down, and on multiple time frames, everything from, let's say, a 30-minute all the way up to a monthly, I'm finding these levels that give us this really nice plan to go forward into this week. So again, out there on YouTube at Trendy Trading, I have a very short video that teaches you how I trade this. If you have any questions, please reach out to me. I'll be happy to answer them. Now basically what I'm looking for, and please understand this, is that I'm looking to go long over the green line. Okay? Now this might mean that it's an intraday setup, or I could be going for a swing. And that's one thing I want to convey to everyone out there that's listening, is that you don't know that. You don't know what I'm going to do unless you're in the room listening to me and so forth. But what I'll tell you is, just to make it very easy, is if I push over the green and let's say the conditions are still choppy and volatile, I could be going for what I would consider just an intraday trade. So my stop is going to be tighter. Okay, if I'm going for something a little bit longer term, say 1 to 3 days, my stop may be underneath this red line here. Regardless, if things push up over the green line, which happens to be 444, I'm looking at trimming into 446.12, bringing those stops up and then trimming into these numbers as well. Now notice this week I have a fourth target on the SPY, and that's because if things turn around and the bears are wrong and we push with force, we could see this upper level of 455. Now, right now, a lot of people are swinging short, a lot of people are bearish. So in that case, if for some reason we break under 438.98, I want you to take into consideration this last EMA down here. Sure, it could break down, and if it does and we get underneath that cloud, then I would be looking to short into 435.18, where I'd be looking at trimming. Remember, all levels to the downside are support until proven otherwise. Therefore, they are trims on a position going short. So if price hits 435.18, I'm bringing that stop down and basically, placing a stop just above this number. And if I get stopped out, I'm out, and then I'm looking for the trade back to the upside. Now again, as I said, it's easier trade when things break below the cloud and when they get above the cloud. Notice that the last 2 weeks over here on the left-hand side, we have topping wicks, another very important structure that if you're a new trader, I would encourage you to watch my video on YouTube about topping wicks. This is the first sign to let you know that bears are in control. And they are definitely in control because we could not get over the 618 of this range. And the range that I'm talking about is going to be this pivot high up here and this pivot low. So if we were just to draw some fibs on here from the top to the bottom, basically what I'm saying is they could not get over the 618, and every time we came into that level, we sold off very hard. Again, inside and up structure, sideways, we are making lower highs but higher lows. Okay, let me go ahead and point that out to you. This is the low that I'm looking at right here. This is the low that I'm looking at right there. Okay, and then when I look at the highs, it's up here, and then I have a lower high here. This is what we call a sideways trend. And it's very, very difficult to navigate because you're going to get a lot of chaos here. Think about it. Everybody's torn. They really cannot pick a direction. A lot of times, sure, you can make money on the downside, but in many cases in this market, those on the downside have also been wrong several times. So have the bulls, because again, we are in that sideways market. So one thing that I want you to concentrate on is the cycle of the market. How many days are we spending going up versus down? In many, many cases, you'll see that the cycle lasts anywhere from 1 to 3 days. And over that, you could see 4 to 6. Notice here, we have 1, 2, 3, 4 as we approach the top of the cloud. Okay, also the 618 was around here. So this being over 3 days, we knew that the cycle was coming towards an end. So allocation started to come off. Meaning, if you were full risk on, notice it came down to the trendy edge, and buyers were here. Then we went sideways, and once we made that higher high, we went ahead and engaged longs. We did that. All right. And then you're looking at, having a good time to the upside, but you need to be counting because really nothing has changed since the inception of the market. In most cases, the cycles last, again, 1 to 3 days. So just be careful and understand what's going on. Right now, we're coming into a cycle where we have 1 day, then our second day here. So we could see a gap down, but just understand that that's coming into around the 3rd day. Now, again, just like back here, we call this a flush low. A flush low is very, very important because a flush low lets me know that so many people were knocked out, right? And once all these longs are knocked out, price typically will reverse and then head back to the divergence, meaning the cloud here. So a couple things I'll be looking for going into this week. One, can we get that 3rd or 4th day cycle down? And the key will be the flush low. Again, the flush low, although I'd love to see it, is very painful for a lot of traders, especially those traders who are long. Because most of the time, they give up on their positions. And then second, price turns around just like it did here. And then they're then chasing it as price moves up. So please just think about patience. This week is all about patience for me. Just kind of watching for these levels. Again, the neutral strategy is my go-to because although I understand what the immediate trend is, I have a plan in case something changes. And basically, if we're in the neutral, stay neutral. That's as simple as it gets. Let's go ahead and move on to the Qs. As a matter of fact, before we do that, what I'll do is I'm going to pull up TradingView, okay? And I'm going to update you with the notes. So last week, this is a monthly chart by here. We had bulls are in charge if this following week holds above this level. Now all this was a 618 basically, okay? A Fibonacci level of the range that I showed you before. Notice that price did push up here, okay? So we can go here to the week and you can see we pushed up into that 618 again. Okay, and then we pulled off from there. Now I have you on the monthly because it's important to understand that the cloud is very, very important when it comes to trend, or let's just say the exponential moving average. In this case, I have a 9 on here. Notice that when we came into the cloud here on the previous month, we found buyers, and then price did push up. Now we are headed back down, but just like I showed you on the weekly, do we take out the low? Or is this just going to be what I like to call a rounding bottom? A lot of rounding bottoms start with a flush low. They're difficult because a lot of traders are concentrated on the fact that they think that the low has to be tested again. So yes, we could still short, but I want you to be careful as you get closer and closer to this low. Because really at the end of the day, that is going to be the key. Let me go ahead and just draw in this month for you folks. And by the way, there's a trendy edge right here at this support level. And this is a very important level. Okay. Now I'm going to draw this in for you because I want you to see what this could end up looking like. And again, we could flush the low and things will look different, but I want to show you this because I think it's important and we've been right many, many times. So we could get this pullback. We could get the bears feeling really happy about potentially crashing the market as they would want. But rounding bottoms again start to look something like this. So on a higher time frame, sort of what we went through several weeks ago, we start to do this pattern. I call this the rounding bottom. And then as we make a higher high, I feel confirmation, and then I'm looking for this move here. Now again, that is the bullish side of things. On a bearish note, what I would tell you and for what you need to look out for is if we take out this low. Okay. Now probabilities are very high if we take out this support line. Okay, just understand that. It's around 427.24. If we start to break down below there, your probabilities are 85% we'll hit this low. Okay. Now, once we hit that low, what I would like for you to do is just go ahead and draw yourself a line on that low, just like this. And if we were to drop below there, this now becomes resistance. What was support then becomes resistance. And I would look at staying short as long as price can stay below there. Let me go ahead and draw that out for you. Price comes here. It will probably most likely bounce a little bit. But let's say it comes up, then it pulls back. We break below this. This becomes your resistance, meaning if the bulls try to get back above it, most likely what happens is you get this test and then it breaks down again. Okay? So the next target here in an event like this, so let's say if we get a capitulation event, I want to be concentrating on the 13 EMA. That's me, okay? This works best for my strategy. So a 13 EMA on a higher time frame, the monthly here on the SPY. That would be my next target, okay? And so you can see if I come over here with my crosshairs, basically that is at or around 403, and I'm talking about a capitulation event if that were to occur. Let's go ahead and go over here to the QQQ. But before I do that, my overall sentiment on the SPY, we're in the cloud. We're in the middle. Don't diddle in the middle. Follow the neutral strategy. That's what I'll be doing. Qs. Tech. Let's take a look. Same thing. Looks like an H pattern, right? It's kind of the norm. We break down. We find support. Round this inside and up. And then we push up. We get our hopes up. We forget to look at the cycle. Hey, I didn't realize. We're 1 to 3 days up here. In this case, we had 2 weeks of up. But notice that we could not get over this cloud. Once again, this is the weekly. It's very important to annotate that and to understand that and to journal it. And notice now what looked like something that might happen has now turned into the H pattern. The famous hope pattern. Because you hope that bulls can hold this low. So just like the SPY, folks, I would say it's very important to pay attention to this low, but to also understand if we gap down tomorrow morning into one of these levels, my first reaction is going to look for a bounce. Now, I'm not saying, please write this down, I'm not saying that the bounce is going to be everlasting. What I'm saying are the levels can be used as support, and you may get that nice little bounce for a little move to the upside. The biggest picture on all of these names that I will be talking to you about today is whether or not price can actually get back above the clouds. So whether you're long, most people tend to go to the bull side, is that you really don't want to be long unless we can get above a cloud. Well, that would take a long time here on the weekly, most likely, unless we get a good catalyst this week. And over here on the daily, we need to wait till it gets above the cloud. And of course, you can go to the 4 hour, the 1 hour, 30 minute. All I'm telling you is this, and I've said this 4 times already. The easier trade is above or below the cloud. As long as we're staying below the cloud, look for price to continue sideways to down. If price moves up into the cloud, it actually gives you a better risk to reward when it comes to shorting the market. A lot of people get it wrong, just like they get it wrong to the upside. When prices fall and they get scared, they end up buying puts at the bottom, just to see price reverse. And as it reverses and gets closer to the cloud, this is where they get excited and then they buy calls and then price drops again. This is called the H pattern. The higher probability, the best risk to reward, is waiting for price to hit that cloud on the time frame that you're on and trying your puts from the cloud, not from the bottom. Now, I will tell you, in capitulation events like we had back in COVID in 2020, there were cases where the market was going down and you could just buy and you would make money as the exuberance was to the downside. Okay? But in many, many cases, again, buying puts at resistance are the best areas, not at support. Now, structure, inside and up, topping wicks. Again, bears are in control. And the neutral strategy is what I'll be focused on this week. Pretty straightforward. If we break down below, I'm looking to go short into 342.96. Disclaimer, if we open up at or around 342.96 by 341.85, I'll be looking for support for a short-term bounce back up to the cloud. Overall sentiment on the Qs, just like the SPY, I'm looking for it to be choppy to sideways to down, unless we start to break above the cloud or above the top neutral. Let's go ahead and move into the bigger picture here. And we're going to pull this up here. Let's go to the Qs. Alright, so here's the QQQ, and this is the monthly as well. A couple things I've done here is I moved the inside and up to around basically what I'm seeing, just in case anybody wants to know, give you a little lesson here, is I have it inside and up here, but I have some nice little structure coming out of here, meaning the candle's a little bit bigger than normal. And then down here, I have the same thing going on. So basically all I did was combine these two and we had that little area of support. Notice that we came back to that support last month. So nothing's changed here. It looks like everything else that I just showed you on the weekly. We have a low. The question is whether or not we take out that low. If we do take out that low, I'll be looking for the 13 EMA at around 325. Notice here on my notes, monthly chart, easy to feel bearish here, but once again, my focus is the previous low. The previous low, also the first test of demand. If price breaks that low, I would expect 327 by 322. Let's go ahead and move on. And let's look at the diamonds, DIA or the Dow Jones. Whoops. All right, so here's the Dow Jones. Overall, check out this smorgasbord of things. Red, yellow, green. This is just a mess, honestly. But some things that I want to point out here. Topping wicks, okay? Bears are in control. Inside and up, we still have that formation going, but we are in the cloud, folks. So same story here. Sideways to down unless we can break out over the cloud. Notice this is my neutral. You can see the numbers here. And basically, I don't want to mess around in the neutral. However, it is possible to trade in the neutral, and many of us do. But we will not go into that here during this. Overall sentiment here, as I said, look at this, the overall banners up here. It's a mess. Okay, so it's a sideways trend. We could be coming into a little bit of support. Let's go ahead and take a look over here at our trading view, and we'll go to the DIA. All right, notice here on DIA, I did not change this one. Let's see, DIA, no changes. As we enter the inside and up again, like the other charts, we have this wick to deal with. That's a big wick. And matter of fact, we're actually not very close to the low of this, which tells me if we cannot find support here, and it looks like we're kind of coming into support, but if we're not, then we have a lot of room to the downside in the Dow. All right, let's just say that SPY and the Qs are kind of showing you what's going on. Well, the Dow was strong when those guys were kind of pulling back more than the Dow. The Dow has a little bit more room to pull back. So as I said, if for some reason we head lower, you could see 340 by 335. Overall, I'm neutral again on this chart. Let's go over here into IWM or small cap. All right, same. Look at these topping wicks over and over. This is not an easy market, folks. This is not an easy market. And sure, you can see that. Even when you're going to the upside, all of a sudden, things push down on the IWM and you find yourself down here. Okay? Oh, you were bearish? Well, too bad. Things pushed up and they kind of just settled right in the middle. Yeah, but I believe we're going to stay bearish. Nope. Sorry. Burn everybody out. Okay, well, I'm about to get long. Nope. Sorry. He did that inside the cloud. Now we're all the way back to here. This is not easy by any means, whether you're a professional trader or just learning. My overall sentiment for all four of these charts that I'm showing you, just relax, stay patient, learn how to allocate, learn how to go big when the time is right, or when to just sit on your hands. During this environment, I choose to continue to trade because that's what I am. I'm a trader. But what I will tell you is that my allocation remains a little bit smaller. I do not put myself in a position where I'm going to blow up, ever. Okay? Never. So I'm always paying attention to the overall environment, to my net liquidity, and understanding where I want to be and what type of market. This is a sideways market. It's choppy. Bears are in control. It's not easy. I don't care what side you're on. You can have some easy days. Some days might be better than the others, but overall, this is a very much exhausting market for many traders. So, for right now, I'm going to trade with caution, and that's my overall sentiment. Stay small, wider stops, have fun, but have some good levels. And if you don't have any good levels, come and check us out at Trendy Trading, where I could show you how to come up with some of the best levels out there. Now, before I end this session, I do want to take a look at the skew. Again, the skew is important to me. I'm just kind of curious where it is. Remember, the skew is your hedge funds, and how are they positioning? Well, I could tell you this. If we were to put the chart of SPY in the background, SPY would be headed down. Basically, what this is saying is that people are fearful. And if we look at the put-call ratio, I can guarantee you that people are jumping all over the puts. All I see is opportunity. I smell opportunity, and I hope you can too. The question is, how much opportunity? Because this market's only given us maybe a fraction of the opportunity we saw in 2020 and in 2021. It's just giving you a couple days at a time. So before I end the session, do not forget, pay attention to the cycle. Let's say that we drop just a little bit more into some of those support levels. We go long. Just be careful. Pay attention to the day. Are we on our first day? Are we on our second day? And so forth. We are getting close for a risk-on situation, for me anyways. And anytime the whole entire market is on the put side and they're fearful, why wouldn't you rip the market? Just something that could happen. But again, I'm going to use those levels to stay on the right side of the trade. And I hope you do too. I hope you have an amazing week. Enjoy the Super Bowl. Enjoy time with your friends. We'll see you back here tomorrow morning. If most of you don't have too crazy of a night, I'll see you 30 minutes before the market opens, live and in charge, right here at Trendy Trading. Have a nice day.